Clearing off my desk. Soon I hope to shed this hoodie. It's still really cold out there. How you doing? This is the 0DTE morning market analysis, and it is Tuesday, March 4th. How you doing? This is the 0DTE morning market analysis, and it is Tuesday, March 4th. How you doing? That was pretty good. I haven't made that faux pas in probably a year. Sorry about that. Anyways, while I was rudely interrupted by myself, this is the 0DTE market analysis, and we're here to look at the market volatility, come up with a directional bias, and look at the market structure to determine whether or not, or not whether or not, but how we're going to position our out-of-the-money butterfly trades for this 0DTE event. And all I can say is this is exactly what we're all dreaming of as traders. We want this level of volatility to be present forever. Of course, it has its implications, but as a trader, I have to be a little bit greedy here and say, just keep it coming, please. But, you know, the consequence of that is world turmoil and tariffs and war and peace, and we would prefer peace, obviously, and who knows what else. But it's all good. Anyways, this morning I wanted to focus a little bit on volume profile. I was going to talk more about tariffs, and I thought, well, you know, is that really a topic anybody really wants to hear about? What you really want to hear about as traders is how we're analyzing the market structure and what are the possibilities for today. So let's get to the charts instead of just keep on talking and blabbing away. All right, here we go. To the charts. And as I said, volatility now has climbed deep into the Goldilocks zone. We were at, we were just at 24, but we're right at just below 24 at 23.69. And you can see that that's indicating a very wide fly for us today, probably between 35, 35 is probably the operative fly. I'd say 25, 30 to maybe even 40 wide, You're going to find good pricing. And we're going to see why in just a second. The market is pricing in extreme volatility, and what that means is volatility has been delayed. The decay of the volatility has been delayed dramatically, which has the effect of pumping it up, just bloating it. So there's a lot more potential, lower gamma risk, and better pricing on your flies. And we'll see that when we go to the big ass fly. So let's do that. And we do that by going to Thinkorswim and taking a look at our 50 wide E-mini S&P futures, and we can see that the debit this morning is only $13. We don't see that very often. The lowest I've ever seen it is $7, maybe a little bit lower, $6 and change, but right around $7. $13, that just doesn't happen very often. But as you can see, for an at-the-money fly, that's an incredible risk to reward. It's almost like what we would get when we put an out-of-the-money fly. Now, that is implying also that the expected move is much larger. Price moved down dramatically yesterday, 100 plus points. Could the same thing happen today? Yeah, it could. And that's what the market is pricing in. So when we go back to our VIX, in our VIX chart, we can see that we're way down here on this end. So we're definitely 35 wide. I would say maybe even 40 wide today. So there you go. That's our disposition on the width of our flies. Should be able to get good pricing. And let's take a look at the market direction now. Directional bias. Yesterday I was kind of on the fence. I said it's almost a coin flip, but I was definitely, I still went bearish. And that was a good call. As we have, wow, look at that. That bearish candle completely obliterates the previous green candle. Wow. And now we've moved down even further. So we're definitely on a bearish bias. So that means put flies out of the money below the market. Now let's go to the market structure. Oh, wow. We've already dropped this morning. Look at this. And looks like we're bouncing off the bottom of this volume node here. But we're looking for moves that look kind of like this, where they move up into a structure and then show us some level of resistance there. And we can detect that using perhaps our divergence indicator here, like we did here. And then take that trade, taken out of the money butterfly down here below. Now, I mean, I do have this marked up now, but let's go and zoom back out here so we can take a look at that. And a little bit more of a bird's eye view and see where we're at. And do I have... Yep, everything looks good. Let's get this indicator out of the way. And then just see where the profile is. See, we're not getting all of it in here. We need more profile. Like more cowbell. We need more profile. All right, let that redraw. All right, so you can see that this volume node down here, we're bouncing off the bottom of it, as we did back here in early January, actually mid-January. And we're revisiting that. Now there's a big gap here, but there's a very, very strong what I call what some people might call a low volume node. I don't know why it's a low volume node. It's the antithesis of a high volume node or a volume node. I call it a volume well or a crevice. This is going to have super strong support right there. But if it does break through, we could just very easily slip right by this relatively minor node here. I don't know. It really depends on the market sentiment and how the market's looking at this current geopolitical situation. But this is danger zone, man. We get down here, there is low liquidity. There's not much holding us from really dropping. Let's see. Let's bring more of this in so that we can get a better look on this. So, yeah, we could drop another 100 points, no problem. And it gets really frothy down here. Let's see. Let's go back. Man, do we have to go much further back? Wow. So we're going to have to start evaluating all of this volume down here because it gets pretty frothy. I'd say that this 5,800 level is kind of a line in the sand. The next major level is probably going to be at 5,700. And then again at about 55.70. I'm just amazed that we're talking about these types of prices, but it really looks like that market is just steamrolling. So there you go. There's our analysis. So all said and done, we're going super wide. The big ass fly is in play right now because of that at the money E-mini fly. Our directional bias is down. Now, sometimes when we have a directional bias, I've seen some members ask about this. You know, they're trying to second guess the directional bias, thinking, well, maybe I should wait until the market opens and see which way it's going. You know, when you're chasing the market, you're almost always wrong. It's easier just to take a directional bias and then just settle with the fact that 50% of the time you're probably going to be wrong. And that's why we take the asymmetric trade, so that we have very small risk and it doesn't hurt us if it goes wrong. Now, excuse me, but if the market comes down or goes up in some sort of impulsive move, it's probably best to wait for that pullback that often happens right after that impulsive move, and then make your decision, or still stick with the direction because you're going to probably be right. So anyways, directional bias is down. Structural levels, as I said, were marked up here. Let's see if we go back to those. No, I can't. Well, you saw where they are. Just go back, rewind. Tariffs, peace, war, taxes, all that stuff is coming. So I think there are no economic reports this morning. I do know that President Trump is going to be speaking at 9 a.m., so that may also add a little bit of tension into the market. Other than that, we're good to go. Again, like I said, this is where we want to be as premium collectors. High volatility. Might not be where you want to be, but it's where I want to be. I also want to be in warmer weather. Coach Ernie,